Welcome to today's more important Tuesday, 6th of December with me, Rich Market Analyst at Handset Markets. We've got a relatively settled market open today, not really a great deal of movement on the European indices at all really. You've got a mild underperformance from FTSE 100, but to be honest there's not really a great deal of direction across Forex markets either. There has been a dollar corrective move yesterday following on from that sharp rebound that we saw on the euro, which pulled the dollar index lower, and we've now completed a small top pattern on that move below 100.65, which gives us around about 1.5% lower. So you would sort of point towards that 99 breakout level, 99.10 breakout level, being the sort of area that you could see a possible correction to, and we're seeing some interesting moves there. So the Treasury yields marginally consolidating really in the last few days as this sort of run higher is just starting to just slow a little bit, and that's sort of coming with this dollar correction as well. So it's all playing out in the same sort of way. But we've got not really a great deal of going on today in terms of economic announcements. Obviously, the market is sort of calming down following on from that Italian referendum on Sunday, and just relatively settled today. But there's not really a great deal to look out for. You've had overnight the RBA announcement on monetary policy, 1.5% on interest rates, keeping hold there, but sort of alluding to a sort of slight concerns over growth. So the market's taken that as slightly dovish. The Aussie is the underperformer in the Forex markets today. Now, in terms of your other data today, you've got the international trade for the US expected to sort of deteriorate slightly on that. Come on. Okay, slightly deteriorate to 41.8 billion, and then you've got the the factory orders, which I'm hoping will come up quicker. Come on. Yes, factory orders 2.6% on the month, so that would be above that October 2015 level to the highest since June 2015. So that would be a strong month-on-month data release there. So that's at 3 o'clock. So they're really the only two bits of data that we really could see markets moving on today. So that takes me to my chart today, which is the Kiwi actually. Now the Kiwi I've been looking at. Sorry. Wrong chart there for the Kiwi. The Kiwi has been sort of consolidating really in the last month, and it's interesting. In the last week, and it's interesting that we've seen this old uptrend channel, which has now become the basis of resistance. Not only that, the old 144-day moving average, which had been a very strong basis of support, now having broken below that, we're now seeing it become the basis of a resistance. Now, in the last week, we've basically moved sideways. Not really been able to continue the traction above that 71.70 reaction high that we saw last week. Markets have been sort of posting a few mixed candles. Yesterday's bull candle sort of helped it higher, but it hasn't been able to break out, and it is a bit of a pivot line, that 71.70 level on this chart, so that's interesting. The market has unwound to 50 on the RSI. MACD line's not really doing a great deal, having crossed higher. That's a positive move, but then just tailing off a little bit. And yes, you've got the stochastics rising strongly, so there is a sort of a mixed element to the outlook on the momentum, but I'm interested in the fact that we're sort of finding resistance under this old trend channel and also underneath the old 144-day moving average. So what we are seeing is a sort of a bit of a consolidation really, as you can see that on the hourly chart. If I put the crosshair in there, you're trading above this sort of 70.40 level, but below the 71.70 levels. And within that, you've got neutral momentum indicators on the hourly. MACD lines have just crossed lower again as the market's falling away, stochastics falling away, RSI falling away. So again, it's sort of coming back, and I suppose there's a bit of a sort of mid-range pivot, you can argue, around 71 figure. Maybe come back towards that. Tested that 70.65 sort of key support on a near-term basis, which were yesterday's lows. So we could see another retracement within this near-term range, and I don't necessarily think the Kiwi is breaking out at the moment, although very mild positive bias on the momentum indicators, but yeah, nothing too significant, and that old pivot around 71.70 is big overhead resistance. So I hope that helps you with your outlook for today, and I will speak to you later. Thank you.